Hi, I'm Dr. Charlie Peterson. I'm the author of Dude, Where's My Profit? The Accounting Finally Makes Sense mini course. If you're not familiar with my program, please go to my website, www.dudewhere'smyprofit.com, and I have a CD there with an overview of how I approach the teaching of Financial Accounting 1, and it's free, so please check that out. Today I want to talk about closing transactions. Now, closing transactions are one of three transactions that you will experience in Financial Accounting 1. Essentially, there are three categories of transactions. There's the daily transactions. These are the interactions between you and your customers, and they span the accounting period. You then have a few adjustments to do at the end of your accounting period to bring your accounts up to date. So when you prepare your financial statements, all of the accounts are complete and up to date. What we are looking at right now is a ledger with the adjusted balances. And you'll notice that I have my backwards C ledger just to remind you. Assets here increase as a debit, liability as a credit, owner's equity as a credit, revenue as a credit, and expense as a debit. Now, we are going to accomplish two things with the closing transactions. Number one, we're going to zero out the temporary accounts, and there are three categories of temporary accounts here: dividends, revenue, and expense. These all go back to a zero balance at the end of your accounting period. And the second thing that is accomplished is we're going to update retained earnings by adding net income and subtracting dividends to give us retained earnings at the end of the period. All right? So we're going to start out with, what I'm going to do is I'm going to post the numbers first, then I'm going to create the journal entry, and then I'm going to show you a trial balance, which is called a post-closing trial balance, which will result in just the permanent accounts. So let's get started here. Let's start with service revenue. How do I make service revenue a zero balance? Well, you simply debit it for its balance, and then you end up with a zero balance in that account. As you know, every debit needs a corresponding credit, so what we're going to do is simply credit retained earnings for $925. What we've essentially done is we've closed out revenue and we've transferred the balance up onto the increase side of retained earnings. Well, let's put that into a journal form then. What do? We debited service revenue for $925, and we credited retained earnings for $925. All right, so that's your first. That is your first closing entry. All right, now next we're going to close out our expense accounts, and each of those currently have a debit balance, so we're going to credit the balance and zero out the account. So we'll put 200 here, which gives us a balance of zero. Credit this for 275, and a balance of zero. Ads expense, we're going to credit for $50, which will make this a zero balance. And salary expense, we're going to credit it for $200, which makes it a zero balance. All right, so what we're going to do then is we're going to add up all of the expenses. You can get this out of your income statement if you so choose, but we'll just add these up here: 200 plus 275 plus 50 plus 200, and that equals 725. So what we're going to do is we're going to make a compound entry and enter 725 onto the debit side of retained earnings. All right, now we have the revenue here and the expenses here. So let's get this one into journal form. What did we do? We debited retained earnings for $725, and we credited all of the expense accounts. So you have to itemize each one of those. Rent expense for 200. Supplies expense for 275. Ads expense for 50. And salary expense for 200. All right? Now let's take a look at the numbers we have put into the retained earnings account. We know that 925 is an increase, so that's going to be 925. And this is a decrease, so we're going to subtract 725. And we come up with, let's see, 925 minus 725 equals 200. 200 is the net income. Here's your revenue minus expense gives you your net income. So by closing out these two categories of temporary accounts, we have transferred net income to retained earnings. Now we have one more temporary account to close out, and that's your dividends. That has a current balance on the debit. Remember, dividends is a contra account, so it's just the opposite of other retained owner's equity accounts. So let's credit this for 25, and we'll put it over here. So there's your third closing entry. So let's get that in here. Retained earnings is 25, and dividends is 25. Okay, now we're going to recalculate the new balance for retained earnings. So 550 plus 925 minus 725 minus 25, and it equals 725. All right, so what we're going to do is we're going to put the balance in here. It's going to be on the credit side, balance of 725. Okay, so that's the new balance for retained earnings. All of the temporary accounts now are at a zero balance, and we've accomplished what we set out to do. We zeroed out all the temporary accounts, and we've added net income and subtracted dividends from retained earnings. Now there's one more thing we have to do, and that's a what is called a post-closing trial balance. We're going to just check to make sure debits and credits are equal. So our current balance in cash is $80, and for accounts receivable it's 50, and for supplies it's 25, and for equipment it's 1,000. Accounts payable is 430, that's on the credit side now, and retained earnings is 725. Now we want to verify that our debits and credits are equal, so we'll get our calculator out again. We'll add up this column here, 80 plus 50 plus 25 plus 1,000, and that's equal to 1155. Now we're going to add up the right-hand column, 430 plus 725 is equal to 1155. And we'll just put a double line under here to indicate a final balance. All right? So that's the closing process. The question becomes, do you do the journal entries first and then post them, or do you post them and then do the journal entries? Well, you can do them either way you want. It really doesn't really matter because you're all going to end up in the same place as well. All right, well, thank you very much. I appreciate you viewing. Please let your friends and colleagues know about this website.